So Google made an announcement that they are buying a stake in ADT for $450 million as they start to double down more in the home security segment of their business. This of course resulted in ADT stock shooting up quite significantly, but then we had a competitor stock actually dip near 20% on the day because of this news. So there's a few videos out there focusing on ADT stock, asking if ADT stock is a buy, but what about the competitor here that dropped 20% in a single day with no fundamental change to the direct business? Yes, the competitor probably got a lot more funding and could be a bigger threat over the long term. However, here today, it could be a really good buying opportunity after this 20% dip. So that's what we're going to be discussing here today. I'm going to reveal the stock in a second, and I want to spend some time discussing the fundamentals around that business, looking at some of their financials, and really determining if that stock is showing us any value at these discounted prices. And guys, these videos take a ton of time and research to do, so if you appreciate that, all I ask you, hit that like button down below, and if you really do want to support the channel, you can hit that join button as well down below, and honestly it helps out a ton, so I really do appreciate it. Thank you so much for your support, but let's get into it. So if you haven't guessed it by now, the company we're going to be discussing today is ALRM.com, and they claim to be the platform for the connected home and business. These guys directly compete with ADT, which is why when Google made this announcement, ALRM stock got rocked and investors panic sold the name. But the question we need to ask ourselves is, was this sell-off justified, or was it just an overreaction? Before we can really answer that question, we need to understand the business to figure out what makes this company a possible compelling investment. So here's a rundown from a high level on the business. ALRM is a company that provides a platform for security services for residential owners and businesses. The unique part of this company is that they seamlessly connect the key devices in your home onto one platform so they work together and work smarter. This makes it flexible for the end user to use whatever smart device they want, from smart bulbs to water sensors to smart thermostats, and then have it all on one platform to monitor and keep things in check. The business was founded 2 decades ago. It's a software as a service company. They have over 9,000 partners for their service, and they have nearly 7 million subscribers for their service. They are still a relatively small business here today at 1,227 employees, but really the question remains, what makes this a potentially exciting business? Well, they are in a large growing market, and they say they are the market leader and innovator in this space, and they have a very lucrative software as a service model, as you guys know. I love the business on this model because it generates consistent and stable income that is predictable, and generally these types of products or services are very sticky to consumers, and customers remain with them for a very long time. The last point is that they have seen very strong growth, and they are a profitable business as well, and the growth that they've seen is as a result of the industry as a whole growing in size, and by 2022 it's expected to be over a $21 billion market. So this is checking off a lot of boxes. Clearly it's a growing business, clearly it's in a growing market, and as the world becomes more and more reliant on technology and security and surveillance, and we really want to be safe and secure, companies like ALRM play a bigger and bigger role in our society. I honestly think this is a niche that's going to explode over the next decade or so, as more millennials start to go out and purchase their homes, and they like playing around with these like Nest thermostats and smart home products and all this other kind of stuff. And with a platform like ALRM, you can do that and have everything integrated all in one, keeping you safe and secure. And honestly, I've kind of noticed a big spike in this area over the last few years. You have companies like Nest come out with their smart thermostats and smoke alarms and all this kind of stuff. You have companies like Ring, which got bought up by Amazon. You have other smaller players in the space like Yale or August or other companies that really provide these smart home products. And as time progresses, this is just going to get more and more relevant. In fact, in the residential market in the US and Canada, ALRM has only 6.8 million out of the total 144 million homes available. But the interesting part is that out of those 144 million homes, only 24 million of them have some sort of monitoring security system in place. So ALRM has nearly a third of customers currently out there. The market is huge and the opportunity is huge, which is why Google has made their push here in this space with the part ownership here in ADT to try to capture some of that market. Now, like I mentioned, Ring was a company that Amazon had bought recently, and they're also kind of in this home security space. They provide things like a smart doorbell and all that kind of stuff, so it's not really a direct competitor with Alarm. However, it shows Amazon's intent for this space as well. And guys, this is kind of an aside, but I think that if Amazon does want to really become a big player in this space, a company like Alarm could be a perfect acquisition for them. Google has their footing now with ADT, so Amazon really wouldn't want to go in there with that. And the other option here for a good established player in the space is Alarm. So I wouldn't be surprised if another big tech company looks to either have a big stake built in Alarm or flat out acquire them in the next few months or years. But anyways, getting back to the business, the residential portion here is just one aspect. The other big aspect is business. In the US, there's 4 million smaller mid-sized companies that could potentially use Alarm services for monitoring and security. But really the big opportunity here, in my opinion, lies on the right-hand side of your screen where you see video surveillance, and it being a $4.4 billion market to capture. Alarm recognized this and acquired a company called OpenEye in 2019 for this exact market. OpenEye is a leader of video surveillance as a service, and they have their service deployed across 15,000 locations. Leveraging OpenEye's relationships, Alarm can grow this arm of their business as well, diversifying them more from the pure play residential security that Google is seemingly after with their Nest family of products and this latest stake purchase in ADT. And of course, HD video monitoring is a big thing that they do as well. And what this allows you to do is view your camera and see what it sees from anywhere in the world. They provide solutions for smarter access control for office buildings. This helps to reduce the amount of suspicious activity or break-ins, as everything is actively monitored and alerts are sent if any suspicious activity is detected. And a key reason they're able to achieve all this is because their Alarm AI is in place. This AI system provides analytics for a variety of different things like video or HVAC or unexpected activity, and it's able to be proactive with security instead of reactive like traditional alarm systems might be. So that's just kind of like an icing on the cake here. You understand the business, and now you understand the real value prop that they have, which is the capability to really be on top of things by using their proprietary AI system here, which could really differentiate them significantly from the competition over time. Alarm is really focused on their partner community because this is how they feel they can grow into a much larger company, and I personally think this is not a bad idea. Here they show us a chart of how they are different with their product, and some key points are that they are able to leverage their analytics to improve the experience, they offer professional installation services, and they are professionally monitored. Now the direct competition, ADT in this case, also does provide a lot of the same. However, Alarm has its unique aspects here, like their Alarm AI, which differentiates them from their competition. Here you can see a worldwide view of where Alarm is currently in, and what I do like about this business is that they are a company with worldwide exposure. They're primarily in North America, but they also have operations in South America, Australia, and some parts of Europe, and a few countries in Asia as well. So they have some really good exposure all over the world. Right now, I'd say the exposure is good, but I would like to see it get better, and they are working on expanding to more countries over time, and this will give them access to the global 1.5 billion homes that could use their service in some way, shape, or form. So you guys should be pretty confident now in the business, and if it sounds exciting to you, let's move on to the financials, because that's going to make or break this company as a possible investment. This is a high growth business, generally 25% compounded annual growth rate, broken down into software as a service and hardware and other revenues. What I like is that the software as a service segment is growing nearly twice as fast as the hardware and other section, and this will generate higher margins for them and higher profits. Software as a service models are generally very lucrative, so I like to see businesses shift to this sort of model, and I can see that Alarm is really trying to push this part of their business more and more. They have a renewal rate of around 93%, which shows that their product is sticky and their customers are happy with their service that they offer, which is another strong sign for a healthy business in my opinion. In the next year, analysts are predicting growth to slow down with Alarm down to around single digits or so for the business, and this could also be driving some additional fear for investors. Slower growth and increased competition doesn't usually bode too well for long-term success. However, guys, as time progresses, that software as a service portion continues rising, and if that trend does continue, even slower growth will still generate more profits. Looking at their income statement, we can see the consistent growth the business has seen, with revenues up nicely year over year in Q1, but costs also increased, resulting in smaller profits in Q1 2020 versus Q1 2019. Nonetheless, they were still profitable and saw growth, and as that software as a service segment increases over time, I suspect the net income will as well. Jumping over to the balance sheet, the asset side looks pretty good. They have a decent amount of cash and current assets. However, I did note that they have a lot of intangible assets value here, which in a tough spot won't really help them get out of a pickle, and it is something to make note of. But regardless, the total asset sits at around $624 million. If we remove this intangible goodwill asset, it drops it down to around $419 million. The liabilities for the business actually doesn't look quite bad at all. $77 million of current liabilities, which is easily covered by their cash, and $257 million of total liabilities, again, easily covered by their total assets. And even if we subtract the goodwill assets from the total assets, this is a very good balance sheet. So is ALRM stock showing us value today at these current prices? Well, I actually think there is a case to be made here to gain some exposure to this company after this steep sell-off. I think that what we saw in the market was a lot of irrational selling that resulted in the company now sitting at a $3 billion value. Considering they generate over $500 million in revenue annually, this puts them at a price of sales of 6, which as a growth company is a pretty good value, and I am open to starting a position in this stock. Now the question is, will I actually open up a position here? Well, I'm still kind of digesting all this information, and I'm in no rush to open up a position, but if I do, my VIP members will be the first to know. So if you are interested, check out the link description down below to our VIP membership group, guys. And I do know that ALRM is scheduled to release their earnings sometime soon. It may already be out by the time this video is released. So if you guys want me to make an update on that, and you guys are actually interested in the stock and you think this could be a pretty good buying opportunity here after this 20% dip, let me know in the comment section down below as well, and I can create an update video on ALRM once again. But either way, guys, this was a pretty exciting video, and I think this company has a lot of excitement, and like I said, this is a segment that I think is gonna just keep expanding over time as home security becomes more and more important in our society. So that's just my thoughts. Let me know what you think in the comment section down below. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.